if you can master support and resistance, you are going to make a lot of money. Most traders complicate their charts with different types of indicators, tools, and to be honest,
what the hell is even that?
But the truth is the market respects simple price levels. So in this video, I'm going to show you guys how professional traders use support and resistance to find high probability trades that make them make money month after month. So in this video, I'm going to cover what support and resistance really is, why traders use them to make consistent profits, how to correctly draw support and resistance zones, how to trade from these zones, and last but not least, how I just made $1,000 right now as we speak this week with my free Telegram channel. I will show you a lot of people also made money using this simple trading strategy, and you will be able to make money profitably using it. So watch the end of this video. Support and resistance are simply areas where price reacts. Think of it like a ball in a room. The floor acts as support and the ceiling acts as resistance. Whenever the ball hits the floor, aka the support, it bounces back up, and whenever the ball hits the ceiling, aka resistance, it falls back down. So the forex market behaves in a very similar way. Support is an area whereby buyers are waiting in the market. So when price comes down to support, buyers step in and push the market up. So they start entering the trades for buys at a support level, also known as the floor. And when price reaches resistance, sellers step in and push the market down. So these are big banks and big institutions waiting at these levels. This is very important for us as retail traders to basically go with the big banks, with the big institutions, with the government and other big companies. So knowing this information, we basically wait for price to reach to those areas and we trade from those areas. So if you want to know when the market is going to sell, you wait for market to reach to those support and resistance before you can basically sell or buy. Now, finding support and resistance is actually very simple. You only need to follow two basic rules. Rule number one, you should always look to the left. The first thing you want to do is to look at the left side of your chart. We do this because the market leaves clues in the past. You want to find areas where price has reacted multiple times before. Now, these reactions are basically what we call swings. A swing is basically a place whereby the market rejected a level and went the opposite direction. Rule number two, your support and resistance should have at least 3 or more touches. The more touches price reacts from a level and reacts from it, the stronger the level becomes. Now that you guys basically know what support and resistance is and basically know the two rules, I'm about to show you guys how to draw support and resistance from scratch in any forex pair, crypto or anything, right? I want you guys to stick to the end of this video because at the end I'll be sharing with you guys the secrets on how I basically draw my own support and resistance and how to master it in less than 3 minutes. So stick till the end. Now I'm gonna show you guys how to draw support and resistance from scratch. So all you have to do is have a charting app. So I basically use TradingView. The majority of traders I know use TradingView. So basically go and download TradingView. If you have a laptop, you can basically go to the website tradingview.com and basically put your name there and log in and your Gmail, right? Once you open the app, you'll see watch list, right? And then you'll see multiple forex pairs, right? Now, once you come to TradingView, all you have to do is you go to the currency pair of your choice, right? And then on my laptop, it's on the left hand side, and I'll basically click the shapes over there, right? So I'll go there, I'll look for shapes, and then I'll look for rectangular tool. So now after looking for rectangular tool, after doing all that, all I'll do is that I'll basically start from where price is currently. Like now, as you can see on USD, I'm starting from where price is currently and I'm swinging it all the way to the left hand side, right? This is very important because once you swing it to the left hand side, you'll see areas where price has previously rejected multiple times. So just like I explained earlier on, it must have 3 or more touches. So when you're swinging to the left, you're basically looking back in history to look at the areas whereby price have rejected multiple times. As you can see here on USD CAD, the market has rejected here at the top multiple times. It has rejected more than 4 times, more than 3 times, making this area a very, very strong area for us to sell, right? A strong resistance level. Now, if you look to the bottom, you'll see a similar thing. There is a support area, but we only have 2 touches and we just recently got our 3rd touch. We have 3 swings there. So far, we have our support and resistance within USD CAD. So now all we have to do basically is wait for price to come to that. As price is currently in our resistance, we're going to basically be looking for sells, and once it sells, when it comes to our support, we look for buys in our support. That's basically how we'll be trading this in our forex pairs. Remember the ball example I gave you guys. Once the market touches these areas, it reacts. Buyers are right there at the bottom looking to buy, and sellers are right there at the top looking to sell. Remember, it's also buy high and sell low. So whenever the price is at a low point, the buyers enter, and whenever it's in a high price, the sellers enter. This number 4 is going to make you guys professionals, because this is how I actually made $1,000 trading it, right? I sent this trading signal to my group. A lot of people also took the trade. I'm not the only one who took the trade. So I'm basically going to show you guys how I spot it, what I look for, the other things I add to my support and resistance to basically make my money. Okay, so without further ado, let me switch over to my trading view screen and show you guys everything step by step. Okay, so now I basically want to show you guys how I was able to catch this trade, right? So I caught the trade from the orange line you're seeing here to this bottom place here. That's basically how I caught the trade from this point here to this bottom point here. This is the trade I took this week, right? So basically, let me explain it for you guys in simple terms. The first thing I look for when I look at the chart is my market structure. Are we going in an uptrend or are we in a downtrend? And in this case scenario, we were in a downtrend on the 4-hour time frame. So knowing that we are in a downtrend, I was obviously looking for sales no matter what. So we created a lower low, lower high, right? Lower low, lower high, lower low, and then we created a lower high at the point, right? So knowing that this is a lower high, I was basically waiting for the next lower low. Now, have we fully gotten the fully lower low? Not yet, but I still took profit, right? Because sometimes you just have to take profit, and I'll also give you a reason on why I took profit. Okay, so now that we're looking for a potential lower low, I was looking for sales initially, right? So what I basically did was okay, I took my rectangular tool from where the market was at the point, right? At the lower high, I meant to say, I draw my tool all the way to the left hand side, right? And as you can see, there was more than three touches, right? We have the first touch. I'll basically mark it up. We have our first touch, right? And then we have our second touch, and then we had our third touch, right? The third touch was actually what gave us the final push to the downside. As you can see, of that, I could have entered for sales, but unfortunately I did not enter for sales. So what I did is that I waited patiently for the market to come back up to create the lower high, and then once it creates the lower high, I will enter at the fourth touch, right? So I can still drag this thing along. So I was waiting for the fourth touch. So knowing this, that I'm waiting for the fourth touch, I basically waited for a confirmation entry, because the market was all the way here, so I had to be patient, right? I had to be patient. I had to wait for the market to come all the way up here. So when it finally pulled up there, what I basically did is that to my area of resistance and obviously potential lower high, I went over to the 1-hour time frame. And while I was in the 1-hour time frame, I basically did a very simple entry confirmation, right? This is called weak rejection and engulfing candlestick, right? I have a video on that. I'll leave it in the link below, or you can check my YouTube channel. You'll see it. It basically consists of two things: this weak rejection here, these two things here. A weak rejection and an engulfing candlestick. So seeing these things, the weak rejection basically lets me know that okay, buyers were in control, sellers stepped in and left a wick. So a wick is basically a trail. It's basically showing that the market was once here, but sellers pushed the price down. So after knowing that, I saw this huge engulfing candlestick, engulfing more than three candlesticks. So I basically took my sell position here when the 1-hour time frame candlestick closed, and then I basically took my profit, right? So I was going in, I took the trade on Tuesday, so I was in good profit, right? So now what did we create here? I want you guys to look at this very clearly, right? So I'll basically take my path tool to help you guys identify all these things I'm seeing. So this was a higher low, higher low, higher high, and then we broke structure, creating a lower low, and then we created a lower high, and then we created a lower low, right? So now, knowing that we have created a lower low, I was waiting for a lower high push to then obviously sell for the next lower low, and then lower high, and then lower low, right? So knowing all this, I basically took my second entry here. This is why I took my second entry. And you might be asking yourself, Prince, why did you take your second entry? Because the same thing, if you look to the left, the market rejected from this area a couple of times, right? So we have our first rejection. So we have our first rejection here. We have our second one here. And then we had the third one, right? So we had multiple rejections in this level, right, on the lower time frames, of course. So when the market came here to create a lower high, I was like, okay, this is a good time, right? So I did mention it on my Telegram channel that, okay guys, I'm waiting for a engulfing candlestick, and this is where I saw the engulfing candlestick. This one over here was my engulfing candlestick, right? So I basically took the trade. I went to my short position. I placed my trade here, stop loss below, right, below, and then I was targeting the next area, right? Stop loss below engulfing candlestick, and then I was targeting the next area, right? So this is how I was able to make the money, $1,000 in total profit. Yeah, so I hope that basically explains why I took the trade. And now you might be asking yourself, why did you exit the trade? I exited the trade because of my psychological levels. These psychological levels help me know where the market is going to reject. But this will be a video for another day. So psychological levels are like the top, the cherry on the top, right? Top on the cherry on the top. I'm confused. But yeah, so this is it for the video. I hope you guys learned a lot. Please subscribe, and psychological level video is coming very soon.